Imagine waking up, checking your phone, and realizing your job has already been paid for. Most people believe you need millions of dollars to retire on passive income. But what if a single, specific portfolio could start replacing your salary much sooner than you think? Today, we are breaking down 5 powerhouse stocks that can generate exactly $5,000 every single month in pure, hands-off income. The biggest mistake beginners make is chasing the highest yield without checking the company's financial health. A massive double-digit dividend looks amazing until the company cuts it to zero next quarter. That is why we are balancing all ultra-stable corporate giants with high-yielding income champions. If you want to make $60,000 a year in passive income, you need a plan that actually survives market crashes. Let us start with our first wealth builder, a company known quite literally as the Monthly Dividend Company. Realty Income, ticker symbol O, is a real estate investment trust that owns over 15,000 properties globally. Instead of dealing with leaky toilets and difficult tenants, you let them collect rent from massive corporations like Walmart and Dollar General. They pass that rental income directly to you every single month, not just once a quarter. Right now, Realty Income has a highly reliable dividend yield of 5.1%. To make $1,000 a month from this stock, which is $12,000 a year, you need to own about 3,700 shares. At today's prices, that requires an investment of roughly $235,000. It sounds like a lot of money, but compared to buying a physical rental property for that price, this requires zero maintenance, zero landlord stress, and pays you automatically on the 15th of every month. What most people do not realize is that the compounding effect of monthly payouts is much faster than quarterly payouts. When you reinvest those monthly checks, your share count grows exponentially. But before you put all your money into real estate, we need to diversify into a sector that keeps the world running. That brings us to our second stock, the energy infrastructure giant Enbridge, ticker ENB. Enbridge operates the most complex pipeline network in North America, moving about 30% of all crude oil produced on the continent. They do not care about the volatile price of oil. They act like a toll road. If oil flows through their pipes, they get paid, which makes their cash flow incredibly predictable. Enbridge currently boasts an impressive dividend yield of roughly 6.9%. To secure your second $1,000 monthly payout from Enbridge, you would need to generate $12,000 annually from it. With a 6.9% yield, you need to invest approximately $174,000. The best part is that Enbridge has increased its dividend payout for over 30 consecutive years. This means your monthly income is practically guaranteed to grow over time just to keep up with inflation. If you are enjoying this step-by-step blueprint to escaping the 9-to-5, go ahead and hit that subscribe button right now. We post daily deep dives into market opportunities designed to help you build real, lasting wealth. Now, you might be thinking that waiting to save hundreds of thousands of dollars will take way too long. That is where our third asset comes in to completely accelerate your timeline. The JPMorgan Equity Premium Income ETF, ticker JEPI, is an absolute game changer for income investors. JEPI does not operate like a traditional stock. It is an actively managed fund that holds large-cap U.S. stocks while selling covered call options against them. This strategy allows JEPI to generate massive amounts of immediate cash flow, resulting in an annualized dividend yield of about 8.2%. To get $1,000 a month from JEPI, you only need to invest roughly $146,000. Because JEPI pays out monthly, it is one of the fastest vehicles to build up your cash flow engine. But there is a catch that most investors completely miss. Because JEPI uses an option strategy, its stock price does not grow as fast as the overall market during a bull run. It is designed almost purely for high, immediate income rather than long-term growth. That is why we must pair it with our fourth pick, Verizon Communications, ticker VZ. Verizon is a telecommunications titan with an incredibly sticky customer base. Think about it. When times get tough, people might cut back on dining out, but they almost never cancel their phone plans. This consistent utility-like revenue allows Verizon to pay a stellar dividend yield of 6.60%. To get your fourth monthly $1,000 slice from Verizon, you will need an investment of approximately $182,000. Verizon has raised its dividend for nearly 20 consecutive years, providing a bedrock of safety for your portfolio. The surprising part comes next when we look at our fifth and final asset. To round out our $5,000 goal, we are looking at the Vanguard High Dividend Yield ETF, ticker VYM. While individual stocks are great, we want a massive safety net of over 400 different blue-chip companies to protect our capital. VYM tracks high-yielding U.S. giants like JPMorgan Chase, ExxonMobil, and Johnson & Johnson. VYM has a lower dividend yield of about 2.8%, but it offers incredible capital appreciation and rock-solid safety. To generate your final $1,000 a month here, you would need to invest roughly $428,000. Let us look at the complete portfolio structure to see how this translates to real-world freedom. Stock, wash ETF. Annual yield capital required for $1,000. Month, JEPI, 8.2%, $146,000. Enbridge, ENB, 6.9%, $174,000. Verizon, JEPI, 6.6%, $182,000. Realty income, 501%, $235,000. Vanguard, VYM, 2.8%, $428,000. Combined, you need a total portfolio value of $1,165,000 to generate $5,000 every single month. While that number might seem intimidating, remember that you do not need to have all of it today. By consistently investing $50 a week and letting compounding interest do the heavy lifting, you can reach this financial freedom number years ahead of schedule. Keep an eye out for our next video posted daily, where we show you exactly how to accelerate this timeline using simple tax-free investing accounts.